right. This is Event Trader here. We got Blue Chip Trader on as well, of course. And what we're doing right now is we'd like to go through on a quarterly basis the 13F filings. The reason for doing this, we're well aware that the data is a little old. This will represent everything in filings for Q4. Hedge funds, investment houses, they all have to post these 13Fs on a quarterly basis, about 45 days at the end of the month, or at the end of the quarter, I should say. So obviously December 31st, you got all these released out over the weekend between the 13th to the 16th. Some might release it a couple of days earlier, and that's totally fine, but they will have everything posted within a 45-day time frame. And I think it might have been just delayed a day because of the holiday today. But in it is information about all the holdings that these hedge funds had at Q4. And you can kind of follow the money a little bit. And what Scott and I like to do is look for interesting charts that are playing out, that are either seeing buyers or sellers come into play, that, if they've sold out a position, it could signal that perhaps there's a bit of a trap door, if you will, that could lead to further selling just because you got some weak-handed positions in there and not the big whales. And on the upside, too, if you find one that hasn't really broken out but, has significant support from somebody that had recently been buying it, then that might give you a little bit more of an inclination that this can break out. Certainly the names that are associated with it that we cover on the site are the bigger ones. But you can find a lot of information in there as long as you understand that it is a little bit dated and that it's not an exact replica of holdings at that time, then that's fine. And we'll go through that and kind of show some of the ideas that we're looking at on that front, starting right off the bat with the George Soros one. But we have been able to pick off some pretty good names in the past. In order to follow with us, you can find all this information on the briefing site. The Endplay team does a great job at posting all the 13F information, and you can find that under the ticker INSID, short for insiders, obviously. If you put that in the top right corner in that ticker bar there, it will pull up all the insider activity that we've been seeing, including those 13Fs. You can see them listed down there. So we'll be running through these. Please feel free to write into feedback if you're seeing anything of interest, and we'll be sure to discuss it. But Scott, let's break right into George Soros' holdings right here. And this is a perfect example of perhaps some dated holdings. New positions in the Soros fund included QuantumScape QS, approximately 3.32 million shares. So, right off the bat, that's certainly something that is of interest. I know you've been playing this. It's up over $71 now, and Soros getting involved there is something that we're going to want to continue to monitor. Great looking chart. You're still involved in this, I believe, from 45?
45. Yep, 45.
Beautiful trade. We got past the earnings, and nobody was really all that concerned that they didn't have any earnings or revenue. But what they did have was some progress made on their solid state battery, where they were able to get through where they were able to talk about some notable advances, and I think that's why you're seeing this pick up. It's dropped over the 50, but when you see a Soros getting involved there, Scott, that definitely gives you a little bit further conviction in that trade, I would think.
For the most part, but to be honest with you, Gavin, you gave me the most conviction, because this was a name that really went parabolic, as you can see there, throughout November and December, and then it wasn't until the new year came around that you started talking bullish to it, telling me that it could potentially get back to higher prices in due time. So I want to thank you before I thank George Soros. So
I appreciate that. I have not broken the Bank of England myself yet,
but we're working on it. But
we're working on it.
Yeah. But anyway, the 45 support level, I mean, really what it was based off of was the this gap from here, from this mid-December area around 40, and that was the line in the sand that I was paying attention to. So that was really the slowness of the pace down here, and then when things started to break these downtrends on a weekly time frame, we had some upside activity going on there. So just gave us some nice entries there in early February around 45 for a quick trade up to 50, and then we re-entered right before. I believe it had a headline last week. So we re-entered, we added back to the position along the support area, and then we managed to take advantage of the gap. And then, of course, earnings carried a little bit into earnings, nothing too crazy, but working out in our favor right now for the trailing balance.
All right. He also got involved with EEM, which is, of course, the emerging market ETF from iShares, and a lot of people have talked about this being the one of the top plays in 2021. Certainly, the weaker dollar was helping shape that up. We've seen it cool off just a little bit as the dollar's bounced back and rallied, but overall, this looks to be in great shape.
Yeah, let's take a look at this long-term chart of the EEM, the emerging markets ETF. Clean breakout to start the year over $50, or late last year, I should say, and then move into fresh multi-year highs. If we go back to a monthly time frame, all the way to 2007. We are clearing those highs there. So clearly multi-year, decade-long strength for this emerging markets group there as it breaks out to the upside there. So I would never chase anything at this point in time, but any sort of pullback that maintains its position, I'd say above $50, is definitely warranted at looking at adding to your portfolio.
All right, and just as a heads up too, we basically only cover the new positions and the closed positions. If there's one in the increased or decreased, well, that is of interest, we'll definitely take a look at it. But
Yeah.
he also ordered CLVT, Scott. This is a name that I don't know. They provide structured information and analytics for discovery, protection, and commercialization of scientific research. So certainly an interesting look there. I don't know if they would be involved with anything. It doesn't look like it from on the tracking. I thought maybe that would be something that they would have done. But looking at this chart since last May, this has really just had a nice run from that 13 to 30 area. It's been chopping around for the last couple of months, though. Remember, this would have been a new position added in Q4, so you'd be looking at October. You see that spike. He's probably not doing particularly well in it, but again, this is why we look at something like this. You got it rolling around. You got the 200-day moving average coming into play, the 50-day moving average coming into play, and you know you have a good name in there like Soros. So CLVT, does that give you any further conviction, Scott? I know you like these sideways trading ranges.
I do. So if we look at it on a long-term chart, it looks like it made its debut back in the middle of 2019. It's pretty much been an upward trajectory since then. A little bit of a interesting pattern going on the last 9 months or so. One could probably make the case from a subjective standpoint that this does look like a head and shoulders top. You can see the left shoulder's over here, the head is over here, and then the right shoulder comes in around $31, give or take. The neckline would be around $27, around the rising 50-day moving average. What you have to be aware of with all these classic technical analysis patterns is when they fail, they're actually a much stronger signal than what they're initially intended for. So while some people might look at this head and shoulders pattern to be bearish for a potential breakdown below this neckline support around 26-27 and then lead to further downside, right? The reality is that if it starts clearing the right shoulder, there's a good probability it's going to accelerate to the upside and take out the high. That would be a failed pattern there. So really what you want to do if you are new to technical analysis is really just connect the highs to the lows, and then the highs to lower highs, and then wait for that breakout momentum to continue. And knowing a name like Soros is newly adding to this position, it pays to do a little bit more research on it, and then maybe put it on your radar if it starts to trade up through the $31, $32 area, and remind yourself that that maybe you want to get involved. Gav, you still there?
Yeah, sorry, Scott.
Yeah, we're recording, Gav, as far as I can tell.
Yeah. I was looking for what minute we're on.
Okay.
But next up, we got Elon Animal Health, ELAN. We've been talking a lot about the ZOM in the past. It's got Petco that had a recent IPO. So this is a hot space, and obviously, again, Mr. Soros got his fund got involved with it. You can see these spikes too. That seems to be the code that he's getting in, that big buy in there, that
What
pop out
stock? What stock
breakout.
is this, Gavin?
ELAN, Elon Co.
Gotcha.
And then yet another sideways trading range around the 50. So this is very similar to that CLVT.
Yeah, that's definitely an interesting name there. I mean, but this is what big funds do. You know, they take big positions and they ride them out usually for quarters on end, and then they ride that narrative out until something changes or just comes along and disrupts it. So, it's worth taking a closer look at. I mean, we all know that these pet stocks have been really strong. The leader's been Zoetis, ZTS. Stock's just been climbing for a while now. But yeah, Elon definitely worth a closer look here. I think if it starts to clear this downtrend resistance lines back around 32, you could have some nice upside activity. So keep that on the long-term radar there. Overall, I'd say it looks pretty good above the 50-day moving, the 200-day moving average is around 27.
Okay, then a couple of financials here. Ally, ALLY, which looks great, pretty steady upward trend. Synchrony Financial too, ticker symbol SYF. Yet another nice steady upward trend. So they're two names that look pretty good. We also have FTAI, which is Fortress Transit Infrastructure. So this is an infrastructure play. One always has to wonder if Mr. Soros knows anything about who might get business at all. And Fortress, they, for a little bit more exact what they do, they acquire infrastructure and related equipment for the transportation of goods and people in Africa, Asia, Europe, North America, and South America, so basically the world, right? So it operates through three segments: aviation leasing, their Jefferson terminal, and ports and terminals. So it's a big transportation play here for Mr. Soros's fund, FTAI, and pretty good looking chart here too.
Yeah, you know what? Maybe I'm doing an injustice because of what I just said. That a lot of these funds, because they are putting up big money to work and taking on large positions, I should probably not be looking at a daily time frame because they're probably in it for a long haul. So I'm going to switch gears a little bit and focus a little bit more on weekly and monthlies. Take a look at FTAI here. That's a nice, beautiful, clean breakout over the $20 area. Yeah, I mean and he got involved there on that breakout probably somewhere in this vicinity into year end, so it looks pretty solid to me. This is definitely a name that I would start doing a little bit more research on. It looks great above $20.
All right, then we got UPST, which is Upstart. This is a recent IPO. It's had a pretty strong start to its trading. Life. Scott, running from 25 to 105 there, UPST. I haven't noticed if Trend Tracker has been discussing this one, but curious to see. This is obviously rolling over here, and this would be an area where I'd be like, I'm assuming that he's still involved with it, Scott, but I'd be a little cautious here given this type of price action, this rollover, because it looks like somebody's banking some profits there.
Yeah, I mean, so this is a 45, usually this report 3F is 45 days old, right? So 45 days old basically puts it within the IPO range of when he got it, somewhere in that vicinity, under 40 probably. And then even if he's been buying it up thereafter, he's looking at least 100% profit. I don't know about you, Gav, but you get 100%. You get 100% profit.
At least some of it.
In less than a quarter, you're selling some of it. So I wouldn't be too surprised if he's taking some money off the table there. But this one's escaped my my radar. Probably because it seems like it trades on the cusp of 1 million shares some days and then not the other days. And I have a requirement that it has to be above 1 million for a lot of my scans. But wow, what a beautiful IPO. I mean, this is what I talk about all the time. When an IPO makes its debut, how it behaves waves in the week or two after is so critical to where, whether you got a real winner on your hands or not. And this one, you could just see it's pull back, rally, pull back, rally, pull back, rallied. Absolutely beautiful. I got another name you got to do some research on.
Yeah. So then we got EQT here, just taking a quick glance at that because this is a nat gas delivery. Obviously, all the issues going down in Texas. This is a space that's been seeing a lot of interest. This EQT has been a pretty steady mover here. Recently got above its 250-day moving average, and in that energy space, EQT is one that I'd have on my radar.
Yeah, energy's been, especially this stock, not doing well, to say the least, over the last 6 years. Massive downtrend that has been in play there. Just starting to stabilize a little bit, it seems like, and breaking that downtrend line going into 2021. So if you're looking to maybe get involved on a longer-term basis, add a little bit of a energy play to your name, to your portfolio, this might be worth a closer look. I don't think they pay a dividend, so you'd have to have enough patience with this one. But it looks okay. I'd say above $15. I'd say would be okay.
All right. He's got KLR here as the cloud platform enterprise play. Don't know too much about it. Pretty small, only a 14 million float with a 9% short interest. Can't say that I'd be looking to chase it here, but just one that you might want to throw on your radar there in terms of some volatility around, because it's definitely been making an aggressive move, doubling in price since mid-November.
Yeah, nice clean breakout since breaking out over $10 to start the new year. Definitely worth taking a close look at on pullbacks. Yeah, looks great, KLR.
All right, some of the places he increases positions on, we'll just touch upon real quick. Disney, Toll Brothers, NXPI, all strong names. A maintained position that I wanted to point out, and this is kind of what we talk about with a little bit older data. Palantir, he's obviously been a big a notable early entry into Palantir, had approximately 18.46 million shares, but he has stated publicly that due to political reasons, he is looking to exit Palantir. Now they got $1 billion in float, so 16 million shares isn't that big of a deal. But this would be one of those one of those big sellers that I'd be looking at that's gotten out of the way as this lockup period's expired, Scott.
Yeah, for sure. This has been a solid winner over the last 4 months or so. I know you were involved in it. I've been involved in it, or at least I'm out of it as of today. But we all made some really nice money over the last 2 to 3 months in this name, particularly in the early January timeframe when it basically nearly doubled in price from $24 up to about $45. I'm sure Soros also made a bunch of money too, which is why he's probably selling it here. So it is looking technically damaged as it does break down underneath the $30 level on this weekly chart here. It is back below the 50-day moving averages. It is down near January lows, January support levels, so you have to be a little concerned about it right now. Overall, the lockup period, once this passes by and the insiders are selling and other people are selling, any sort of weekly reversal where you start to see a series of higher highs could be a nice little turnaround play on this one.
All right. Moving along, next up we got Pershing Square's Bill Ackman. Nothing really of great interest here. He maintained his positions in Chipotle, Starbucks, and Howard Hughes. Slightly decreased positions in Starbucks as well. We'll take a double look at that in Hilton, but really a pretty quiet quarter for Mr. Ackman there. Then we'll move on to third point with Dan Loeb, and we see that UPST again, where he added a new position in it, 13.38 million shares. But again, kind of makes you wonder, was he one of the people selling here going in? There's a lot of people that have made some good money that are obviously banking those returns right here. So I do like the names that are in there, Scott, but I do think that maybe some of this information could be dated.
For sure. But you know what? Like we say it all the time, that with the dated information, you don't run out and buy these stocks right away. You basically create a radar list or a watch list,
Yep.
and you like the sectors and you do a little bit of homework on your own part. And we do the same thing on our end here. This is always a great reminder for me to get new ideas, and then we start looking at the names and looking at support levels and looking at breakouts and patterns, and jump on board. So it's all about research and stuff.
All right. Now, this one will be one, I don't know if Scalp's listening, but Jaws Acquisition, JWS, another one of these SPAC plays here. I've not seen if they've bought anything, but obviously it's been a pickup of interest, and Dan Loeb certainly had an interest in this one as he got involved with it.
Yeah, it's been a real strong one since November, when most SPACs just took off to the upside of the Q4 of last year. JWS is no stranger to that. It did get a pretty aggressive pullback into the end of January, but decent recovery effort so far, an inside month of this attempted rally back up. Looks pretty good, above 14, I'd say. I'd keep JWS on the radar. Plus, it sounds cool. Jaws Acquisition.
Yeah, right there. You just,
if you're any movie fan, yeah.
Well, I could already guess that all the media will be playing the Jaws theme song when you come in to take a bite of somebody. Another SPAC here, BFT, Fully Transmain Acquisition Corp. He took a position in that. So Mr. Loeb was certainly looking for the SPAC plays last quarter.
He should have been following Scalp Trader, because he's been nailing them. Huh?
Yeah, that would be the move. Nike, which still looks great up here. This is one of those running up to higher levels and then consolidating. And that's something we're certainly seeing here right now in Nike. So this looks great, Scott.
Yeah, I just recently highlighted on the Swing Trader column and on Trader Audio as well. Looks like it wants to break out to new high territory above this resistance level that comes into play around 147, 148. This and Starbucks, both of them look very similar to me. Just kind of consolidating, resting along their recent multi-month highs. If the market continues to maintain its upward trajectory in this multi-month up channel and looking to go into a little bit more safer names, these things have potential to probe recent highs. So I would keep them on the radar.
All right, here's also one of the people I was buying Intel on this turnaround story last quarter. Intel, great quarter as news spread. Number one, they had a great Q4 earnings report, and then with the change of leadership there. And also they, as I said, they're one of the ones that are benefiting from the semiconductor shortage, because all the missteps that Intel's had over the last couple of quarters, they're getting a little bit of a reprieve and a catch-up time here, since people simply can't get them out the door.
Yeah, one heck of a recovery the last couple of months here. It's helped the SMH, just been, one of the leading sectors over the last few months to start the new year as well. I wouldn't really be necessarily chasing it aggressively up here at these levels. Obviously, there was more value down at prices below 50. But overall, you can't argue with the upward trajectory that that Intel is, showing here to start the new year. So maybe watch it on pullbacks, get a little consolidation, a little pause over a month or two, and then maybe you can capture some more upside momentum in it.
All right. Next up, a recent IPO, Wish. Context Logic is the name. Basically, what they do is they operate an e-commerce platform, and we've seen from Shopify and Wix, and not so much Balzon, but these e-commerce platforms are definitely garnering a lot of attention. However, I would note that this has seen some pretty aggressive selling over the last couple of sessions here, Scott, breaking below that 27. Never really like to see that. So you got any thoughts on Wish?
Yeah, I mean, this is falling right back below that initial IPO range. So the stock made its debut in mid-December, and after a little bit of a chop, between $20 and $24, it looked pretty poor of a start going into January. But buyers stepped up there. This is probably somewhere in the vicinity where you've probably seen, who was it, Dan Loeb? What are we talking about? Still, or did we
Yeah.
move on? This is
Yeah, no, we're still on low.
yeah, my guess is that they probably got involved somewhere in this vicinity here, because they, again, giants tend to leave the footsteps a lot of times where they are getting involved in. And now lately, yeah, Gav, like you said, it's coming back in, and I'm not a big fan of when prices start coming back below their IPO debut ranges. This stock is at a critical point here. It needs to maintain. It needs to find support down here and then start turning back up. Otherwise, it could be headed back down to fresh lows.
All right. Now, last one we'll mention from Mr. Loeb is this APTV, which it sells vehicle components worldwide here, electrical and electronic and safety technology solutions. Very similar to the VNE that I did part ways with this morning, but I'll continue to keep an eye on that. But this APTV, pretty steady chart right here.
Yeah, I'm going to guess that they got involved somewhere on this breakout over $100 resistance into new high territory, clearing 2018, 2019 resistance levels. Price action just basically launched up to the upside there. Looks fantastic. All-time new highs for APTV. Yeah, it looks great. I would watch this one on pullbacks.
Okay, so decreased positions for Mr. Loeb. This is one I find interesting. This is kind of one of the things we look for, Scott. FTV, which is so we see it consolidating in a sideways manner from between 66 and 77, really through much of November. Now, the thinking is this: either he's sold out and 66 is going to hold because the big sellers are out, or this could break down a little bit more aggressively under 66s. There's a little bit less support out there. Now, FTV, they basically engineer software products looking for to provide test tools and thermal imaging and collaboration equipment for electrical, industrial, electronic, and calibration applications. So this is one that I'd be a little bit concerned about with that trap door that we were mentioning before, Scott.
Yeah, definitely an interesting name. Again, we're not sure where he got in. You'd have to go back and take a look. But just assuming that he's just basically ready to move on from this overall, either from a valuation perspective or just put his money to work elsewhere. So definitely a tough little chart to read there, but technically, I think it looks okay above $65. That was a recent breakout in the latter half of 2020, and I would just basically watch this name. If it does start turning around at some point in coming months and quarters, it could potentially break out over new high territory around $74, $74, $75. So, one to just put in your back pocket and keep it on your radar down the road.
All right, and this is an interesting name that he's closed out. Square, SQ. I mean, I'm looking for opportunities to buy on the dip, so I wouldn't be overly concerned myself, but definitely of interest when we see something like that going on.
Yeah, we've talked about Square for a couple of years now. It's been on the emerging growth focus list. It's been on the liquid momentum focus list leaders. We've all traded this stock on multiple occasions, made tons of money off of it, mostly from the long side. And here recently, it's just been a stellar winner over the last year or so, breaking out to new all-time highs, over 240 even recently. So, I mean, just taking money off the table, Gav, when you got massive gains. I mean, I'm going to assume that they've been riding this trend higher here for a couple months now. Just taking money off the table.
That's what I would assume too, but definitely worth keeping an eye out on.
Yeah.
Okay, moving on. We're going to take a look at Greenlight Capital, David Einhorn's play here, and the first thing we're going to look at is a new position in CEIX. And I mentioned this one as it's another energy plant. I know people are looking around. They are based out of, they produce and export coal, which you don't see a lot of people putting money into that, and operates in the northern Appalachian Basin. So good looking chart here, Scott, and it's always encouraging to see a big pocket in there. You got any interest in CEIX trading, if you're wondering? About 0.3 times price to sales, which is a valuation you don't get to see very often. But then again, not a lot of people are interested in coal.
This is a low float stock. It's only got about 25 million in in
Yeah.
float right now. So he owns about 4 million of those. That's pretty hefty. So it has doubled in price since the November lows. So you have to kind of take that into consideration. That obviously he probably got in somewhere over the last couple of weeks, and he could be reducing his share size, given the fact that he's probably up easily over 20 to 30%. Technically, though, this is really interesting. I love stocks that go from single digits to double digit territory, especially after they've been beaten down for a long time and they've established some sort of base and then they're breaking out again. I don't really own too many energy stocks. Looking at a chart like this, seeing a fund manager like this add a position to it, the low float does scare me, but if I was really looking to kind of just take a flyer on an energy stock that's relatively risky, I would take a closer look at CEIX.
All right, and he also added a new position in FUBO, FUBO. This is previously disclosed, of course, Scott. Both me and you were playing it. It got rejected at the 50, so I'm a little cautious on FUBO myself right here.
What do you mean rejected at the 50? I'm sorry, Gavin.
Well, recall last week when we were looking at it going into the close, it was looking for another test of the 50, and that never came. So therefore, we see it slipping down, and never was able to get back above the 50. Rejected at it back on February. $50, yes.
I'm sorry.
I'm sorry, the psychological 50. Yes, I apologize. Not the 50 moving average.
Yeah.
The 50 psychological. Yeah. We might get a chance to see if it tests that 50 pretty soon here, from what I'm looking at in the chart. But Mr. Einhorn is involved, and that's encouraging. And I'd love to see it get down to 38 for a buy myself.
Yeah, I've been on this one since 33, back in the mid-January timeframe when it was rallying off this area right in here, coming out of a 3-4 day pullback off of the 30 support level. Made some nice money there into late January, to say the least. I added a little bit back here recently as it retested the 20-day moving average in this 43 to 48 vicinity. It's just holding its ground here for now. I really don't know. I might cut loose the balance that I added to recently. If I take a look over at the weekly time frame, you can see it's just about 2-week lows holding in there around 42, 43. It's lost some of that momentum with these doji patterns. It does have some distribution going on here this week. There's a little concern. You might actually get your wish of it coming back down towards $38, Gav. So, but that's definitely an area. $38 to $40 is looking like the next key support level that you want to monitor.
All right. And just taking a look, I don't know this name too well. DNMR, Scientific, DNMR. Looks like they do. They supply biopolymers, which, to be perfectly honest, I do not know exactly what they are, but it does look like they're basically biodegradable plastics, which I assume would be involved in a lot of the dissemination of vaccines and shots here, Scott.
Sounds like something Chevy Chase would do in Vacation. I think he made. I think in Christmas Vacation. I watched that so many times over the years with my kids.
Damon's actually telling me that this is a SPAC that got hot. So.
Oh, really? DNMR? Really?
Yeah.
Okay. I think when you say poly, what was the word? Polymers or something or other?
Biopolymers.
It totally sounds like that product that he came up with to put on cereal, and then he put it on the sled, and then he zoomed down the hill, and with that super high speed sled. That is exactly what it sounded like.
Christmas Vacation.
Yeah, exactly. So anyway, this stock is doing great. I mean, what to say? I mean, if it's a SPAC play, then even better. So it's got a product behind it now. It seems like, and it's been doing really well. It is pulling back a little bit towards reality, I guess is one way to put it, after a strong run up. But February lows right here coming into play, about $44, $43 is definitely worth a look. You got the CEIX 40 level coming into play. If it cannot hold in here, I would take a closer look at the 50-day moving averages around 32.30. So, yeah, definitely warranted to take a closer look at if you're into the SPAC area.
Okay, and he closed out his Intel position, so obviously doing a little bit of horse trading there with Dan Loeb. But one name that I did want to take a look at, Scott, that I find interesting is INGR, more so just because of the move that we're seeing here at the moment after he's sold out. It definitely looks like he mistimed this one, I would say. But a nice break above the 200. And you know that there's a big seller already out of the way, so that's an interesting looking name for me.
Yeah, and not to mention, who knows if they got back in? That's another thing too. We're finding out 45 days later that they got back in, and maybe they didn't buy as much. That's the key thing too to realize with these 13Fs. They're good idea generators. They bring the stocks onto your radar, but if they stay under, what is it, 2% or 5%? They don't have to of a stake. They don't have to necessarily report it. So these guys make mistakes just like everybody else. Sometimes they get bail out, and then the headlines turn around, and then they decide to get back in. So overall, take a look at this chart here of INGR. They are in what, packaged foods or something? What do they do, Gav?
Sweeteners. So
Okay.
they sell starches and sweeteners to various industries. So, syrup, solids, things of that nature.
Okay, cool.
Looks to be in a number of different countries: North America, South America, Asia Pacific, Europe, Middle East, and Africa, or all 7 continents. Don't have a geographic breakdown here, but definitely proteins, pet foods, things of that nature they're involved with.
Right. So on a year-long chart, you have this almost symmetrical triangle from which price is breaking out above. So that's a pretty bullish sign there so far to start the new year, or at least to start the last few weeks here. Bigger picture, it does look like a potential turnaround play. So overall, I'd say above $80. That's the apex of that triangle pattern where it's breaking out of. I'd say it looks okay above 80.
All right. And next up, we're going to move over to John Paulson and Company, obviously, and take a look at some of his ads. First one, Thrive Holding, THRY. And there's a chance it's another SPAC. I'm guessing any stock that you see that's trading around 10 that just took off is going to be a SPAC at this point. I got it marked down as an IPO that I'm looking at here, but this is a software as a service in the cloud computing. Obviously, been a hot area for quite some time. Looks like they operate in yellowpages.com, superpages.com, Dex Knows, all those platforms. I didn't even know that they're still around, but Mr. Paulson obviously saw that they still were around and jumped in on the play. You got any thoughts on this?
It looks great. Like you said, it's gone from 10 up to 30 in about 2 months time frame. So, just be careful with it in that regard, that it is highly speculative at this stage. But overall, if you like the name, you like the story, just use simple, basic technical analysis. Watch those key 20-day moving averages. Watch for support levels. It seems like the $20 mark is going to be your line in the sand overall for this stock. So if you give it a little bit more wiggle room, I'd say 18. So $18 to $20 zone would be a pretty interesting area to watch.
All right. And we'll take a quick look. Just a quick heads up, another EQT buy here, so that's another one in the net gas play. So keep that on your radar here as he joins George Soros in that. So this is another thing that you want to see. Are a lot of people moving in on this? And really looks like Paulson was getting in on some of the energy plays as he brought some of the XLE and XOM as well, Scott. So both very similar charts. Seeing a lot of energy plays in the Q4 from these guys, which again makes sense considering the energy was one of the strongest performers. But you got any thoughts on XLE or XOM?
Well, for probably 2 to 3 years since the 2018 era, levels and the highs, we've been avoiding energy stocks like the plague. Number one reason is the fact that the XLE has been struggling underneath the 200-day moving averages, underneath the 50-day moving averages throughout that time. So I think while those downtrends have been in play aggressively, a lot of other major funds have also probably avoided them as well, recognizing their cyclical or secular bear market that they were in. But at the same time, after the COVID, remember when crude oil contracts went negative back during, was it March or April? I think it was right after the March crash. They started going negative in
Yeah,
April, right? To
in
May.
April, which I was talking about that before. It's going to be funny that when people are looking at the year-over-year comps for energy,
Right.
they're going to lose their mind because inflation levels are going to just show like plus 5% year-over-year.
Right. But that was unprecedented territory that we saw there from such a negative viewpoint. It was almost the nail in the coffin that basically put the bottom in for a lot of these energy stocks. And we kind of highlighted that from more of a sentiment perspective, saying that, if prices are getting negative on one of these contracts, that's crazy, So I think people started to wake up to the fact that maybe they took things a little bit too far to the downside in the energy space and wanted to get a little bit more exposure to the group there throughout 2020. And then, sure enough, once November came around, the XLE, along with multiple other groups, just really kind of accelerated to the upside, breaking down trend lines, and you started to see the money pouring into it. And you, myself, a couple other people on our service jumping in, buying a couple of these names left and right. So it's been a pretty good ride so far. I'm still currently long some of the OIH, by the way. Is that cool, Gav?
Yep. Sorry, Scott. Next up, Lear, L-E-A. This is a name that he parted ways with. They obviously make a lot of car parts. And this is a stock that's been holding up pretty well. And you can see rallied all through Q4 as he was selling. So that's a lot of volume that was digested by the markets. He sold out. Actually, it's not that much. He only had 10,000 shares of it, I guess. So
Yeah. Well, auto parts have been hot. The whole electric vehicle area has been hot, but you take into the account that these vehicles are still made up of parts, and the whole group as a industry starts to move higher. So, yeah, it's been really strong name for this one. A big turnaround play off those March lows from last year. Take a look over at the weekly time frame, and yeah, I mean it's made a good recovery. It's been stolen out here around the 2019 highs, around 165, 170-ish area. You know, it's not my most favorite stock in the world. I really don't even look at this one that often, but it is what it is, So,
All right. We're going to move on to Glenview at this point here. This is Larry Robbins, Mark Horowitz. And the first name that I'm seeing in there, this is the name that I was talking about around earnings season, Scott, just 2 weeks ago. DuPont, ticker symbol DD, but hasn't really been acting great, and it's breaking below the 50. Now, it had a strong Q4. I had that nice rally right at the end of the year into 2021, but since getting up to 86, it's been rolling over, giving up about 20% of its gains, coming back to some interesting levels here, but needs to start moving back up and recovering that 50-day. Otherwise, it risks a little bit more downward pressure here.
Yeah, I definitely love the fact that it broke that multi-year downtrend. It looked like it was about a 2.5 to 3 year downtrend line. That was in play there off the 2018 highs. So really strong acceleration over 60 into year end, like you'd mentioned, pulling back a little bit after going a little bit too parabolic, if you want to call it. Stalled out just at the right resistance level too, from early 2019 levels, right around that $85, $86 area. Keep it on the radar. I think it's worthwhile. I think you mentioned this one, right? To maybe dabble in it on a little bit of a pullback here. Doesn't look horrible, Gaff. I think as long as it stays above this $60 area, which is the 200-day moving average, you got a pretty good name in your portfolio.
All right. Next up, this is an interesting play that they added. ARMK, certainly a reopening play here. Scott trying to break out above that 38 level. This is one that I definitely have on the radar here when if we see this mentioned a few more times. You got any thoughts on ARMK?
What do they do, Gaff?
Food services.
Food services, okay.
I mean, I'm sure any of the cafeterias that you've been in at all or anything like that.
I have not been into a cafeteria.
Well, yeah. Well, yeah, I mean, the office building when we were in it and
Oh,
everything,
okay.
right?
I guess so. Yeah, that was still a couple
I don't
years
know
ago.
if they're Aramark, but yeah, So anyway, but again, this is a reopening trade, very similar to Cisco that we've talked a
Okay.
lot that
Okay.
provides, although they're more movie
Plastics
theaters,
and
things like
yeah,
that.
yeah, yeah.
But Aramark, this is definitely a reopening trade, and they're getting in front of it. And we talk about like see a stock pop up and then hold gains, and it kind of formed that island around 33 to 39, and now it's starting to edge back up towards that 40 area. If you're looking at valuations here, this is trading at 21 times forward PE, which in today's market is pretty cheap.
Yeah, it's pretty decent recovery so far. Maybe it's a reopening play too, being cafeteria oriented, like you said, or buffet oriented. So, yeah, it's got potential upside there. I like it above 30.
All right, let's take a look at Anthem, Scott, because this is one that check out that hold of the 200-day moving average after it started dipping down early. So it's encouraging to see. And today, pretty nice price action off that 200-day at the moment. So, this is one of the top inside buyers that I was seeing in terms of from a few of the different sites that I look at on the 13Fs. And the fact that it's holding 200-day, that's encouraging.
Yeah. I mean, it's almost holding it to the teeth. So obviously, you said this before. When you see such obvious technical levels, there's something going on there. At the same time, if it ever blows right through that, you have to, be a little cautious about your holding at this point in time. So, yeah, it's something worthwhile looking at. You said this is a new position that they've developed, or
yeah, it's a new position
that they created. Yeah, interesting name here. Interesting level. I mean, this is really, it seems more like a very key inflection point. It really does need to hold on to this 290, 285 vicinity. If it starts to falter and starts cracking below that level in an aggressive fashion, I would definitely head for the exits.
All right. And then they also brought two rail plays here, Norfolk Southern, NSS, or NSC, I should say, and UNP, Union Pacific. Brought both of those. I just posted some of the quick comments that I was seeing from the CAS data, and everything seems to be clicking over on the transportation side. They've got huge demand going on. They've got all the pricing power there. We've been talking about the the shippers there, Scott. TK just been taking off here, and I mean, it's a great market for them. And if you're of the mindset that we're set for a pretty strong economic rebound in 2021, flush with liquidity, then I just think that this is going to be an area that's going to be a big winner, and it would look like Glenview's of that mindset. So you got any thoughts on NSC or UNP?
They both look very similar. I just threw up a chart of the railroad index, the Dow Jones U.S. Railroad Index, and it basically confirms everything you just said, Gav, where everything struggled initially in response to COVID back in March. The group has been really strong over the last couple months since then on a steady recovery. Here's a monthly chart of the railroad index. You can see the breakdown that we saw in March of last year, then moving up to the highs there. On a side note, anybody that follows or believes in Dow theory, where the transportation indices or supposedly lead the economy, because of obviously you have to move goods and services, or at least goods around the country through air and truck and rail. So as long as these industries are doing well, theoretically the economy is also doing well from that perspective, from the moving goods around the country. So it looks pretty solid to me. I think it looks pretty good.
All right. Then Global Payments, GPN, which, obviously hot on the digital e-commerce side, but this one's just kind of been bouncing around in a sideways direction. You got any thoughts on GPN?
GPN, let's see. Looks great on a monthly chart. It's daily chart, very sloppy. Love the fact that it did bounce off the 200-day moving average back in late January. That was a nice little gap closure as well in that 175 vicinity right there. A little bit of a stall out here, a little concern that it's sliding back underneath the 50-day moving average, but um, it's just choppy right now. No aggressive, no real clean sign of what's going on here. Maybe you look at a weekly chart. Um, it looks okay above 190. 190 was a prior resistance level that seems to be holding up recently. So short term looks okay above 190. Overall looks good above 175.
Okay, so we've got about 20 minutes left, so we're going to cut this short right now. We're going to just take a quick 5 minutes, and we're going to jump back on and talk about the earnings. Still plenty of names for us to go through, so we'll continue to do this tomorrow on Friday and provide an update. But for now, like I said, we're going to end this segment here. Take 5 minutes, get ourselves organized, and jump into this evening's earnings.
Sounds good.
So talk to you in a couple, Scott.
Yep.